This is Rod Kusin Spoomad for Risk on October the 15th, 2014, and oh my, what a day. We're going to give you some of the highlights. When the market began to drop this morning, at 8:35, one of the most unprecedented things happened that I must say I have never seen take place in my life. We have on this chart superimposed the S&P cash index here, along with the S&P Futures in green. At 8:35, the cash index and the futures became the same. And that condition persisted all the way out to 8:43 and 8:44. The cash index and the futures were roughly the same. That means that the premium, which normally has a spread of some 6 points at this particular time, fair value being negative 6.3 as of today, the premium ramped up to a factor of 0, meaning that there was no difference between the cash and the futures. Again, I have never seen anything like that happen in my life. That was scary. But it wasn't the scariest thing that happened today. If you had been watching the initial balance, you would have known that the calculated 1.5 standard deviation line was going to bring you down to 1815. 1815. Your initial balance lines are here and here. The calculation, 1.5 standard deviation below the low initial balance, takes you to 1815. And that is exactly what happened. Furthermore, we bounced off of that level, and in a typical yellow day pattern, if you don't know what that is, take our course, you need to know. A yellow day pattern where the high of the day exceeds the high of the morning and takes place in the last half hour of trading. That's exactly what happened today, and you could have known that it was going to happen. We'll show you why in just a moment. But let's take a look for a moment at how the market profile, the cumulative market profile, also agreed with this 1815 level. On this cumulative market profile that takes us all the way back to the beginning of 2013, it shows us, here we have placed our line, 1846.75, that's the open. The market rallies up to this area of lower volume at around 1860, plummets through the point of control and down through the low of the morning all the way down to this area of higher volume at 1814. Not only did the initial balance calculation agree with this high area of volume, but we also saw the Dow break through the low value area from December of 2013 on into this area of higher volume and finally landing at 15,855. Wow, what a drop. Now, how could you have known what was about to happen? This morning at 9:25, we had a new high for the day on the premium. It was a naked bar. If you don't know what that is, take our course. It will be money well spent. 1857.50 is now being forecast as a price point to which the market will return. However, before it hits the low, at 11:24, we get another new high on the premium, a naked bar at 1839.75. Those of you know who have taken our course that we cannot anticipate that the market will necessarily return to the previous high. Sometimes it does, sometimes it doesn't. However, when the market dropped to the low, you were at 1813 and you already had reason to expect a market rally back up to at least around 1840. Taking advantage of that kind of a move would be rather profitable. But as soon as that's taken place, you're now at 1341 on the clock. The low of the day has now happened, as it frequently does, right around 12:30. And when you're starting to rally back in the afternoon, there's a very high probability that what you will see take place is a yellow day pattern. A yellow day pattern which is characterized by the high of the day exceeding the high of the morning and taking place in the last half hour of trading. That is a yellow day pattern. And that is what you saw take place today. It was very funny as I was hearing the news today, pundits making the claim, oh, have we hit bottom? Friends, we aren't even close to hitting bottom. And what you saw happen today, watch out for tomorrow. And one good reason why, this new low for the day on the premium took place at 1302. The premium tanked. The low was 1818.25, and that was a naked bar. Guess what, friends? We're going back down. And what you saw happen today could very well happen again tomorrow. But by no means should you think that this sell-off is anywhere near close to being over. Let me show you why. Back to this composite market profile that takes us back to the beginning of 2013, right below these levels is a very important level. 1756. 1756. Friends, if we were to rally up to 1878 and drop all the way to 1756, do you realize that that could happen in a day? That is almost a 130-point drop. A 130-point drop would take you below the 1756 level. And yes, friends, that could happen in one day. And the market has already prepared for it. To prepare for such a drop, the NYSE has installed what is called circuit breakers. The rules for those circuit breakers were amended back in April of 2013 and is no longer based on the Dow Jones Industrial Average, but it is now based on the S&P 500. A 7% drop in one day is entirely possible and is referred to typically as a limit down. The NYSE has established these circuit breakers so that in that event of a 7% drop, the market will halt for 15 minutes. These rules don't exist because it couldn't occur. They exist because it could. And friends, the conditions of the market right now could allow for this kind of a drop. We're not saying it will happen. We aren't saying that it will happen in a day, but it could. And will it drop this far? I don't think there's any question about it. And why is this number 1756 so important? Let me take you back in time, all the way to December of 2011. If we look at the composite volume from December of 2011 to date, the upper value area, is at 1756.50. We're not talking about the low value area. This is the upper value area. The point of control, friends, is at 1300. So friends, if you don't think it's going to be dropping, think again. We're not even close to seeing the low. The bottom is way below where any of the pundits have spoken of it being. And here's your proof. Will we see such a drop, a 7% drop in the market, a limit down? Will we see it in a day? I cannot tell you that. But it is entirely possible. We have the kind of market conditions that would permit such a thing to happen. And based upon the charts, whether it happens in a day or not, the fact that it will happen is unquestionably true. We are going to see 1756 coming up quite likely yet this week. So hang on to your hats. This roller coaster is not over. And I'm Rod Kusin, Spoo Man for Risk.